In our next lesson, we will focus on the income statement. The specific objectives for this lesson is to define the income statement and to draw up an income statement including the year-end adjustments and closing transfers. Now, the income statement shows the financial result of the company for a specific period. Let's have a look at our pre-adjustment trial balance for RSS traders as at 30 June 2018. Now, let's move on to our adjustments. Now, we covered our adjustments in detail in previous videos. So now what we will focus on in this video is to prepare the income statement for RSS traders for the year ended June 2018. Now, in order to prepare our income statement, we need income, expenses, our opening inventory, and our closing inventory. So now that we know what we need in order to prepare the income statement, let's have a look at the format. Our income statement of RSS traders for the year ended 30 June 2018 will look as follows. We will first start with our turnover. Then we will subtract our cost of sales. Our cost of sales is made up of our opening inventory plus our purchases plus our carriage inwards or carriage on purchases, and when we add up those three, we will then get a total, and after we got that total, we will subtract our closing inventory, and then after subtracting our closing inventory, that will give us our amount for our cost of sales. There we go. Once we have our cost of sales, we can now subtract our cost of sales from our turnover, and that will give us our gross profit. After our gross profit, we need to add our other income. Now, our other income comprises of our interest on fixed deposit, our provision for doubtful debts, our rent received, and our commission received. Once we add up all our other income, we put it under the appropriate heading under other income. There we go. And now we add our other income to our gross profit. And once we do that, we get our gross income. Now, after our gross income, we need to subtract our expenses. Our expenses are carriage outwards, and remember, carriage outwards is different from carriage inwards. Our carriage inwards or carriage on purchases shows in our cost of sales. Then we get bad debts, then water and electricity, then salaries, interest on overdraft, interest on loan, and then finally depreciation. Then we add up our total expenses, and after we've added up our total expenses, we will subtract our total expenses from our gross income, and once we do that, we will get our net profit. Now, there are some things we need to take note of. Our trading account is this section. It starts at turnover and ends at gross profit. That's our trading account section. Then we have our profit and loss section, which starts at our gross profit and ends at our net profit. Another thing we need to note is that turnover is only written when we have sales and sales returns. Another thing we need to note that if we were to have a net loss, then we need to write the amount in brackets, which is the correct format to use. We should not put a negative sign in front of the number. This will be incorrect. And in our expenses, we need to remember that we need to account for our income and expenses for 12 months. So that's why the amount on interest on loan is 3,400. The difference between the 3,400 and the 2,100 will go to the balance sheet under accrued expenses.